Thank you, everyone, for reading through those disclosures. My name is Natalie Beckett, and I will be your moderator this afternoon for our free educational webinar. As I said, we are happy to host Wendy Kirkland today. She's going to be putting on a presentation for you guys about her proprietary indicators and patterns to pinpoint traits. We are happy to have her. Wendy, are you with us?
I'm here.
Hi, we're happy to have you and excited to listen to your presentation today. So thanks for being here.
Thank you. Thank you very much. I'm happy to be here.
Wonderful. I'm going to go ahead and give Wendy the reins. And while she's pulling up her presentation, I just want to let you guys know a few things. So, Wendy, it's coming over to you now. If anybody has questions during Wendy's presentation, please put them in the Q&A or the chat box, and I will field those over to her at the end of her presentation, time permitting. Wendy's been doing this for a number of years, and we're always really grateful that she likes to provide free education to anyone who wants to listen to it. So with that, Wendy, we're all yours. Take it away.
Thank you very much, Natalie. I appreciate it, and I appreciate you all coming and spending a little time with me today. That it speaks well of you that you're willing to put in the time to learn some new things. I'm hoping what I have to share with you today will be things that you'll be able to apply right away that may improve your trading. For those of you who don't know me, I'm a full-time trader. I have been trading for about 12 years. I've written a number of books that are primarily based on option trading. The basics I've written about is in option trading in your spare time and stress-free wealth building. And then I've gone into some strategy books, and I'm going to cover some of those indicators and share them with you today. That I have found that the primary elements for successful trading, whether it's stocks or options or futures or forex, is first to pinpoint equities that have consistent big moves. And that's just logical when you think about it, to zero in on a stock that moves a few pennies this day and a dime tomorrow and another few pennies. It is much better to zero in on stocks, regular and consistent big moves, so that you can profit from it. The next is to zero in on equities that are either overbought or oversold. And that is the fact that once they hit those areas, then they are have room to grow, either room to move up and recoup, or to drop and give back some of what the gains are, so that then it can move back up again. And we're going to look at it as a visual indicator. And the next then is to find equities that have formed a top or a bottom by being overbought or oversold, and have reversed and are then starting on a new trend. And then lastly is to give entry signals that are confirmed, so that it's not just a quick swing, but you know that a new pattern is actually starting. As I mentioned, my trade vehicle is option trading, and some of you may be familiar with options, others maybe heard the terms, don't really get what they are. There are really two types of options. One are call options, and this is what you would get into if you're anticipating that a stock is going to go up in price, that it has been recently oversold and is getting now ready to move up. And call options give you, the buyer, the right to require the grantor to sell the equity to you at an agreed upon price at an agreed upon time, no matter how high the price is when you decide to sell your option. They must sell it to you at that agreed upon price, and then can sell it at that price and keep the difference. This buy and sell is for you when you close the trade. So it's not like you have to actually go out and find a buyer. It happens for you at the exchange. So a put option is the exact opposite. That you are buying this then when a stock is overbought and you expect that it's maybe going to drop in price. And so put options give you, the buyer, the right to require the grantor to buy the equity from you at the agreed upon price, at the agreed upon time, no matter how low the price is when you decide to sell your option. They must buy it from you at that agreed upon price, and you in turn then buy it at the lower price, keep the difference. And again, this buy and sell happens behind the scenes. So here's an example of option pricing. This is you purchased options on McDonald's, the fast food restaurant that we all know, and its stock price is $165. And you're interested in the contracts for then the 165 strike price because you feel the price is ready to move up. And you pay $3 per share for the 100-share contract. That's 2 months. $300 then a contract. $3 times 100 is $300 per contract. And you decide to buy 2 contracts, total investment of $600. The stock price then goes up to $170, and your premium then is $7 per share when you decide to sell. The transaction happens behind the scenes at the exchange. You paid $3 and sell it, and you keep the $4 difference. So you had 2 contracts. That's 200 shares. So you realized a profit of $800 on your total investment of $600 because you had the 2 contracts. And this is 133% gain. So the leverage that option gives you, that you don't own the stock, but you control the price movement during the period of time, or benefit from the price movement during the time that you are actually holding those options. So let's look at a comparison real quick between owning the stock and the leverage that I just mentioned in options. That if you had purchased 100 shares of McDonald's stock at $165, you would have spent $16,500. When it rose to $170, you would have earned a $500 profit. That's $5 from 165 to 170 times your 500 or your 100 shares. If you had invested, and this is crazy, I would not have done it, but if you had invested that $16,500 in option contracts, you could have bought 55 contracts. And when price then rose to $170, your contract rose to $7 per share, and you would have earned the same $4 times 100 shares times 55 contracts. You would have had earned $22,000 profit. So that is the difference. That is the leverage that option trading gives you. It allows the trader that does not have a huge account to be able to participate in the stock market and be able to benefit from the leverage of option trading. So here again are the criteria, if you want, that I have discovered that work out to be the strongest trades. One is the fact that you want to trade equities that have big moves. You want to zero in on stocks that are overbought, oversold, and then are changing or reversing direction. And then to get in when you have a confirmed entry or exit signal. So here, we're going to take it step by step. This is how I zero in on stocks that have big moves. I have added to this chart an indicator that is called ATR, Average True Range. And what this is going to tell me is how much the stock moves on average every single day. And so it's just set for the default, which is for 14 periods. And we're going to be looking for equities that move on average of 1.5% to 2% per day. Now, you might think that that's a big move, but it happens on a regular basis for a lot of equities. And so with ATR, I'm going to look down here and I can see that this is Micron Technology, MU. And I can see that the ATR, and again, I have this set on a daily, because I want to know how much it moves every day. So I have a daily chart, have the ATR indicator. It says that it's moved $1.69.5. So say $1.70. And a 2% move of its price is 90 cents. Here it is. Its price is $45.15. So a 2% move is 90 cents. I can multiply 45 times 2 is 90. And ATR is $1.70. So this is a great candidate. And so you would start creating a list of equities that have the 1.5% to 2.5% move per day. Here's another one. This is MGM. Again, the ATR down here, I can see that it's 67 cents. Looks like the ATR. This actually it looks like 72, but I think it actually is 67. A 2% ATR of price, it's $27.50. So if you take 27 times 2, it's 54. So again, this is higher than a 2% move per day. And so this would be another good candidate. And so you can build these stocks that have the big moves. And these are the ones then that you're going to start looking for patterns on. That these are the ones you're going to focus your trading efforts toward once you see that they give a confirmation signal. So this is a way of kind of zeroing in on the cream of the crop. Okay, the next indicator that I am adding here is the Channel Commodity Index. That's called a CCI. And this is an equity, indicator that is very visual. It's very easy to be able to see what is overbought and oversold. And I didn't fully introduce myself to sit and tell you that I actually, in my earlier life, was an artist and kind of came to trading after a flood that hit my husband and I's business that we'd operated for 20 plus years. And it flooded and I had to find another way to earn an income and ended up getting involved with option trading, and it was just a wonderful fit for me. But I look at things differently because I don't come at trading from a financial background. I come from an artist background. So I see pictures. And when I look at charts, I feel like they tell me a story. When I look at the indicators, they are telling me the story of what has happened to price, what is likely to happen, and that is what I follow. So here we have the CCI, and I have this set for 34 periods. Smoothed it out a little bit. I think the default is 14, and if I had left it at that, we would have all kinds of little whipsaws back and forth. And what I'm zeroing in on are these green areas and the brown areas on the chart. That the green areas at the top show it when it is overbought and when it's on the bottom. I call these fins, that if you picture them as being like shark fins and so on of fish or dolphins. The brown ones then point to a stock being oversold. And so the areas that we're going to start looking at is when they start rising and cross over either minus 100 here as the brown area comes up and crosses over minus 100, or when the green narrows and comes down and crosses below 100, it's showing that it is moving from being overbought and is starting to drop. And stocks have a tendency to go from oversold to overbought, back down to oversold, and kind of swing back and forth from one to the other. So we're going to have our equities that we're growing in on because they have big moves. And now we are able to easily spot when a stock is overbought or oversold and beginning to move out of that direction. Now, the China Commodity Index is an indicator that is not very often applied to equities. It actually was an indicator that was used for grain and pork belly and so on, for other types of commodities. But it is a very accurate and easy to read indicator when it's applied to equities. So I have other information here derived from the CCI that if you have done some chart study, you're aware of support, resistance, divergence, convergence. Convergence means that it agrees. So the indicator agrees with what is happening with price. Divergence means that it disagrees. And so I marked a couple of examples on here that back in February, we can see that price had dropped during January, hit a level here in February, and then it did some swinging back up and down, but it was still making lower lows. And then I marked the CCI indicator where we had a fin up here, and then the next one was still lower. So this agreed, the indicator agreed with what was happening in price. There was convergence. Okay, if we skip over here to the end of the chart during August and September, you can see that price here dropped in August, and then it went up a little bit, and then it dropped even lower the 1st of September. So it makes lows. But when you look at the CCI indicator, you can see that this fin that was made in August came way down to like minus 100, and the next one was it was still oversold. The fin that it created was up higher. It was only had only dropped to say minus 200. And so when we look, we can see that this disagreed. There was divergence. And this divergence that you're recognizing on the CCI indicator gives you a heads up that because it disagrees, maybe there is some buying that is taking place under the surface that is not evident on first glance, and suggests that before long it may be that this stock is ready to take a turn and head up. Now, again, support and resistance is another concept. That support is floors, in a sense. It is a level that you drop down to, and it supports it from going any further. So Support you think of as a floor, resistance you think of as a ceiling, that there's an area here that is marked from March to April where you can see the CCI went up to the middle line, the 0 line, touched it, and then dropped back down again. Then after reaching a peak of being oversold, rose, touched that exact same line again. It was like a ceiling where it couldn't get any, go beyond that, had to pull back, get a running start, and then fly through it and eventually get to a point where it was overbought. So again, this is a very picturesque, a very visual indicator from which you can gather a lot of information by just paying attention to where the fins are, if they are dropping lower or higher, and how does this compare to what you're seeing is happening in price. When you get toward this middle line, you can look and wonder if it's going to hit resistance and whether the support areas are going to support it. So there's a lot of information you can gather just from that one indicator. All right, we can use this also then as signs of bullish and bearish areas where it is going to reverse. I drew a bunch of circles on here as it moved up above the minus 100 or down below the 100. These lines, and I kind of noted here, highlighted it here. This is the 100 line, this is the minus 100 line, and then the 0 line in between, so that you can actually consider entries or noting that a stock is going to go from being oversold and change direction when it actually crosses the minus 100 or it drops down from the area of 100 down and heading toward the 0 line and eventually then becoming, excuse me, oversold again. And how often, if you take this period of 2018 where it was overbought, you can see that price rose. Then when it dropped down below the 100 is where it dropped here just a little bit, then started heading right back up again to become even more overbought, then pulled back. And it still never really got down here to a super low oversold area. It just had these mild pullbacks where it came down to the 0 line and then crossed right back up for the first 6 months or so of the year. Finally hit a point when it started down below the 100 line, then it had a strong pullback and reached an area of being oversold. Stayed down there just a short while and then started heading right back up again. So you can actually use these then as a simple trade strategy where when it crosses up over the minus 100 line, this could be a place where you are considering entering, and then stay in until a point where it rolls over and crosses back down and starts heading down below the minus 100. Now, for me, I use this as an indicator that I connect with a couple others and use it as part of the story and have it help me to confirm other things that are going on. But it truly is simple enough, visual enough that a person can use this, apply it to any time frame and be able to actually look at it and anticipate that here it was oversold, crossed up over the 100. You can anticipate that it's getting ready to head up. And you will find that you'll be able to read it quite easily. So now I'm going to add another confirmation to this. And I'm often asked, what is my very, very favorite indicator? And you're looking at two of them that are at the top of the list, but the ADX, Average Directional Index, is my absolute number one favorite equity. And for those of you who are not familiar with how you read it, it is comprised of 3 lines. And so to start, we're going to focus on the black line. And the black line is a strength or momentum line. And when the ADX is heading up, it's showing you that strength and momentum is moving into the trade. So if we go to the farthest over here to the left, at the beginning of 2018, we can sit and see that the ADX, the black line here in the middle, started rising and rose for all of the month of January. That is showing you that strong momentum, energy, strength, whatever you want to call it, was in this trade. Then you use the DI lines. And DI lines are directional index lines. The green is the plus DI, suggests that price is going up. It is in control. It is on top. So it is telling you that there is strength and momentum moving into the trade, and it's moving in a bullish direction. It's the line that is on the top. And then as soon as it starts rolling over, it shows you that energy and strength and momentum is coming out of the previous trend direction, which was the plus DI bullish direction. Let's see, we can scroll down here. There was a couple other areas. There was a area here in March where the ADX line headed up. Didn't stay up for too long. It was about 2 weeks. But again, the plus DI line was in charge. Bulls were in charge for that period of time. And we can scoot across here and look in the middle of, toward the end of May. Again, ADX is rising. It doesn't tell us what direction. We have to look and decide which of the DI lines is in control. So here we are again. We have the bullish direction in charge. Strength is moving in that direction. Bulls have the ball and are taking off. Then we scroll a little bit farther over here. Again, the middle of July, had the ADX rising, but now we have the bears in charge, the red line. The minus DI line is in charge. Strength up, 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 still rising, a little flat right there, a little rise. And if you glance up here, what's happening on the chart? Price is dropping, 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 dropping. So you begin to start being able to have, again, the indicators tell you a story about what is happening with price. And it gives you the opportunity to be able to anticipate and see where you think price is going to be going. So the ADX line supports what you were seeing here on the CCI. That you, yes, I can see that maybe the CCI has risen above the minus 100, but is the plus DI in charge? You know, I'm thinking here that price is going to be rising. Is the plus the ion charge. Is the strength moving into that direction? It isn't. We have the DI lines moving back and forth, braiding back and forth, back and forth. The black line of the ADX is heading down so that there's no strength in either direction. So even though I have this smaller bumps or fins, and I can see that it's rising up above the minus 100, is this a trade that I want to consider getting into? I can look to the ADX line and see if there is a indicator, either the plus DI or the minus DI, that has taken charge and is in control and supporting this direction that I think that stock was going to go. But instead of it rising and showing strength in that move, I have instead an ADX that is dropping lower and lower and lower, and have the DI lines crossing back and forth as they're braiding. Okay, let's look at another one here that I have drawn on this chart. A line here of 30, and this is a line that is kind of a dividing line for strength, that if the plus the I and or minus the I rise above 30, this often is the exact same area then where the ADX line is going to turn up. So I can look at this and I can watch and say, okay, right here on May 21st or so, 22nd, the plus the I line is starting to head up toward 30. And sure enough, that then is about where the ADX line starts rising. So I have the plus the I line heading up, and then I have the ADX following suit. So again, I can sit and watch and say, well, here the lines are braiding. Neither side is really taking control. And then here we have the plus DI rising up over 30, and that is about the area where the strength line comes in and starts rising. Same down here. I can sit and see the minus DI rising, getting ready to cross the 30, and that is about the same place that the ADX starts rising to indicate that this drop is really going to be taking place and happening. So again, we start putting this all together, that we have know that if a stock has been recently overbought, it's likely to start needing to pull back and rest just a little bit. It's like it's gotten overheated and needs to pull back. We can then use the drop from 100 on the CCI, and when that is confirmed, I'm seeing somebody say that they're not, don't have any audio. I guess I'll figure that it's working, and Natalie, you'll step in if there's an issue.
Yep, I got it, Wendy. I can hear you, and letting people know how to check their speakers if they're having problems.
Okay, awesome. Thank you. So I have drawn a second line on the ADX that we have the strength line in here that we've just talked about, and I also drew a horizontal line at the 15. And it is often been when the ADX weakens in a previous trend and drops below the 15, that it isn't usually too long afterwards that is like the low of the low, and before too long it will rise and change direction and have some strength come into the move. And so you can see here how it rose during this drop. There was a place back here, it came right down and actually touched the 50, and there's another place over here in the beginning, 2018 in January, where it just dropped down and touched, and then it wasn't too long after that touch of that area that it started rising. So again, it's the indicators. The more that you use them, the more that you are able to read and interpret the information that they're giving you, will give you the insights to be able to capitalize on the information that it's sharing. So this is Baidu, the equity. You're able to see how here we were overbought up here at this high, then it pulled back, came down here, created this lower oversold fin, rose back up, went very close here to the previous top, made another little overbought fin, dropped right back down again, and swung back and forth very systematically a number of times, going from overbought to oversold. And it would have been entirely possible to ride this like it was waves, and having the CCI indicator give you very good indication of when the change was going to take place. Ride it down here to the peak. You certainly could have exit your trade. You don't have to wait till it starts the new trend of coming up and giving you an entry signal for a call. When it made this peak down here and started curling up, could very well have been your exit for your put trade. And then when it crossed over the minus 100, you rode that up then for your call trade. Drop back down here when it made the peak of being overbought, could have exit your call trade and got into another put when it dropped down below the 100, and just have done that back and forth, back and forth. And the DI line showing you each time it rose that strength was moving in to support that direction, and you would have had confidence because of the strength that you were in a solid trade until it started to roll over and change. There's another example. This is Home Depot. You can see that it stayed overbought for a good while. You look down here, you can see that the plus DI was over the 30 line, stayed up above the 30, had this ADX rise that strength was in during this whole period, and then when it started heading down, strength was coming out of the trade. That's also right here where it started dropping below the 100 line. Was not very long afterwards that we had the minus DI take over. Now, the ADX then flattened out. It never actually rose during this period. So it stayed kind of flat, would drop, stay flat, drops. So that even though this was a nice drop, it didn't do it with any real conviction that it would drop down for a day and then it would just kind of go flat, then it dropped down for another day or so, and then it would go flat again. So there wasn't any real strength or momentum. You can see there was no real rise in the ADX line. Eventually it dropped down zone, and then the lines kind of stayed locked in that that channel never really got above the 30 until right here, and this was then a nice rise, again, with conviction, with strength. You had the ADX rising in there, plus the I stayed in rise right in here where it rose up. So you begin have this tell you the details, have it tell you the story of what is taking place in the stock, and what you can anticipate as far as future direction. In particular stock, we're getting very, very close here. The one we just looked at, I'm going to flip back for just a second. So this was Home Depot, and we had a couple downward candles. We can see that all of the lines are locked up in this channel between 30 and 15. The ADX is hitting very close to the 15, and often when it gets down that low, that means that a change is going to take place. At the moment, we have the minus DI line in charge and rising. So we're at a decision point of it's either going to have some strength move into that downward direction, or it's getting ready to change because the ADX is very low toward 15. So let's just flip back again to what happened next. We can see that the DI lines are getting ready to change. We have the plus DI getting ready to take over. We've had 3 or 4 positive candles. We have the CCI has crossed up and over the minus DI. And so for me, the entry here would be once this plus DI gets up here to the 30 and gets ready to cross over. So let's see what happens after that. There it is, right at that point where it has just barely crossed over. I can look over here at the numbers and see that the plus DI is at 31.76. So it has crossed up and over the 30 line. My CCI has crossed up over the minus 100 and has now crossed over the 0. And so that has now gone from being bearish in the bearish zone from 0 down to whatever below it, and the fin is now up in bullish territory. So this would be my considered entry for this trade. And so as it continues on, after it hit the 15 line and the plus DI line moved over the 30, so that's our sign that strength has moved in, is DI line over 30, then we have the ADX has turned up. So strength is now has moved into this trade direction. ADX itself is over the 30. And if we look at what price, our entry was down here somewhere and it has moved all the way up. So very, very simple. So these are kind of the guidelines, and then we'll look at what happened with this particular trade. Is over the course of trading, I know that a 2.5% to 4% equity move often equates to a double in a weekly options premium. And so that is the reason that we look for stocks that have high ATR. That's why we're zeroing in and creating that list of high ATR stocks. It means then that when a stock moves in our direction, it's often going to double within the period of time that we are holding that particular trade. So an 8 to 10% move often equates to a double in a monthly option. So the difference of what we're talking about here is weekly options are when you expect a trade to happen very quickly and you're just going to hold it for a short period of time. Monthly options require a bigger move, but you're trading a time frame chart. And so a 8 to 10% move, and if it moves 2% a day, you're talking about something that maybe would double in a week or so. So in our example, the price increase was $13 or 6%. So had we purchased calls after the open on August 21st, when the CCI indicator crossed the 30 strength zone, the premium would have been $4.85 per share, or $485 per contract for the October 200 strike call. And let's say we bought 2 contracts for a total investment of $960, and then we sell at the end of the day of September 21st. The call contracts were then worth $12.45, or $1,245 per contract, and that's a gain of $760 for each of those 2 contracts. So we would have made $1,520, and that is 205%. So what we're comparing is 205% versus 6% had we bought the stock outright and gained the $13 in price. So when we entered was $199, and when we sold was $212, so that's your $13 change, and that's a 6% increase in the stock's price over that period, and yet the options increased 205%. So again, you have that leverage, that big comparison that's for the investment of $960. We controlled $39,800 worth of stock. And had we placed that same investment in options, you could have bought 82 contracts and earned $62,000 profit. Now, again, that's crazy. Would never have invested that much. It's just an example to show you the comparison between investing in stock and having to have a large account to be able to make that type of purchase, or to be able to control lots of 100 shares through the option contracts and being able to profit, though, from that same price movement. So one of the indicators and patterns that I am most known for, if you mention my name and say Wendy Kirkland, people are going to say, oh, that's the P3 lady. That one of the patterns that I trade most often incorporates the same indicators that we've been talking about today, but it also includes other indicators that create what I call the P3 squeeze. And again, I'm an artist and I see pictures. I'm also a storyteller. So I think about the equities and the charts telling me stories, as you've heard me say here. So the P3 squeeze, I can show to you right here on this one chart, and from now on you'll be able to pick it out, is when the PPO, percentage price oscillator, dips down like this, and the ADX, which is what we were talking about, rises, and they come very close to each other. Now, close to each other is kind of subjective, because sometimes it's not so close like this where they touch, but nonetheless they dip in toward each other no matter how much space is between the lines. And this is called a P3 squeeze. And when these lines then start pushing away from each other, price is going to go up. And it goes through very specific stages. And this is what I write about. You might say, okay, you told me about all these books in the beginning, what makes you different or sets you apart from other teaching traders and so on. It's the fact that I'm very visual. I see things on the chart, and I teach other traders to be able to see the same things. So I'm going to show you one more, and you'll be able to start really seeing. There's another P3 squeeze where the PPO dipped down, ADX kind of rose, the lines came together. Then when the lines push away from each other, and see this pattern, these two indicators, they have nothing to do with each other. They are independent indicators. The PPO has nothing to do with ADX, and the ADX can be a standalone. And I just noticed that when you have these patterns, and they create this P3 squeeze and then they push away, you're going to have price go up. So this is what it looks like right here when it's just starting. It's getting ready. This is the P3 squeeze and a current time frame to suggest that price is getting ready to go up. And so then you have confirmation signals, some of which you have learned today. We're just have this just getting ready to cross the minus 100. So far, the plus DI is not in charge yet. You would want that to be in charge to suggest that price is going to be rising. So if you're interested in more information and learning about the P3 squeezes and more about the ADX and CCI, this is how you would get in touch with me. That hopefully you'll be able to take the information that you learned today and to be able to apply it to your trading and make use of it. Didn't hold anything back, kind of really showed you how those indicators are used. But if you want more information, more education, I do newsletters, books, videos, coaching. You can reach me at wendykirkland.net. You can send me an email at support@iss-trading.com, or there's a phone number that gets to my support people. And most of my books, videos, and so on are easy to read. I cut away a lot of the jargon and talk just like we've talked today, almost as if we're talking across the kitchen table to each other, where I say, see this and see that. It's very down to earth, and a lot of traders like it that way, that cut out some of the technical stuff. Natalie, are you there, huh?
Yes, I am. Just listening and learning. There was a lot of awesome information, you guys. That was, I think, one of your newer presentations. So a lot of good new stuff in there. So thank you for that, Wendy. We do have one question that came through, and we actually went a little bit long, which is no problem. But so I'm just going to ask you this one question, then we'll wrap it up.
Sure.
From Bruno, when you're showing your charts, particularly with the candles, he was asking, what do the black candles signify versus the red and the white ones? I don't know if you need to go back to that slide to show one of your charts.
I maybe could, but I can just tell you what,
okay.
what it stands for. A black candle is a bullish candle in the sense just like one of the ones that are hollow, white, but it means that the stock, the candle opened up but closed lower. So it was still bullish. It opened up higher but closed lower. Most of the candles that are hollow open up in one place and then close higher. This is the exact opposite. It's a bullish candle, but it closed lower than it opened.
Gotcha. Perfect. Thank you so much for clarifying that for him. I'm going to go ahead and grab the reins back from you just for a second so I can show everyone where your presentation is going to be archived. You guys, I know that was a lot of good info. I know some of you came in a little late, had to leave early. For those of you who missed some of the presentation or just have additional questions for Wendy, please reach out to her. She was kind enough to put her contact information up on the screen for you. We also did record today's presentation. It's going to be available tomorrow on avantgardetrading.com, free education page. You can scroll right down to the search past webinars by date area and select October of 2018. That's where Wendy's webinar will be from this afternoon. So please feel free to watch it again, download it, listen as many times as you'd like to. Wendy, I want to thank you for coming on this afternoon. It's always a pleasure, and you always put on a really great presentation, and we really appreciate that. And I want to thank everyone who joined today for another free educational webinar, and hopefully we'll have Wendy back again soon, and we can learn some more.
Thanks, Natalie. Glad to be here.
Thanks, everyone. Have a good night.